Today is 30th, okay? 33/20/24. Okay, 33. Now, what we have done, a very small recap. What we have done is, we are talking about the intangible assets. In the intangible assets, how intangible assets in terms of IFRS 3, and what are the IFRS IAS 38, and how the research and development. Three things we are working. Very small chapter, very specific chapter. Okay, very small and very specific chapter we are going to work it out. Fine. Now we are taking three things. One is IFRS 3, IAS 38, and IAS 36, and IAS 38, intangible assets and research and development. Now it says that an intangible asset is a identified non-monetary asset. Is it right? It is intangible. The name itself says. Is it right? The name itself says it is not physically present. What are the intangible assets? You have licenses, quotas. Licenses are there. Intellectual property right. Now we are talking in terms of IPR. Intellectual property right. Okay? Intellectual property right. What are the intellectual property in terms of patents, in terms of copyrights? You have medicines, okay? In the medicines you have patents. Forget about that. You have the drinking, the water will be there, is it right? The mineral water will be there, what we are drinking. Every Masafi will have their own formula. Arva will have their own formula. Is it right? You have Darbat will have their own formula. Everyone will have their own formula. Now government is also saying that you have to register your logo. Okay? If you are doing the business, they say that you have to get it. Your logo should be get registered. Is it right? That means you will have the copyright. You have the brand names. Okay? You have the trademark. For asset to be identified IAS 38. State that it must fall in. There are two conditions are there to make it IAS 32. Very important conditions. If it is separable, okay, means if the asset can be bought or sold separately from the rest of the business. Is that when we are what is intangible assets? You can sell a brand, okay, you can sell a logo, okay. You can sell the name. Is it? Physical assets are different, intangible assets are different. First condition, it arises from legal or contractual rights. This will arise as part of purchasing. You have to pay. Purchasing an entire company, this will be looked at further in consolidate. We have to make purchases. This we are going to do somewhere in chapter 17 to 19, okay, 17 to 20, okay, 17 to 20 we are talking about how we calculate the goodwill, okay, how we calculate the goodwill. It must also meet normal definition. When you are saying it is an intangible asset, the intangible asset means it should own, is that you should have a right. Very important. Anything you are owning, you should have right. Okay, you should have right. The entity is right of past events. Okay, this is very important. Controlled by the entity as a see what happens. You are doing the business. Is that you have started any company you take. I will take now. I will tell you very simple one. Okay, I will tell you. You know about this one, Cuckoo Burger.
Yes, doctor.
Is it right? It has been started very recently. Is it right?
Yeah.
You see the things. See, this is real. You will enjoy this. Okay. Over a period of time, you see, next year, same time, it will become a brand. Now only it became a brand. But take 1 year, it will become really a brand. It will have more outlets in different part of the country. Okay, every other place it will have outlets. Okay, means this is you have to. The rule says that controlled by the entity regarding past event. Normally by a, and means now they have a right over this. Is that they have the right? They have the right over the name, they have the right over the brand, they have the right over the logo, everything they have the right. Now this is what we are talking about intangible asset. Is that this is what we are talking about intangible. A resource where which economic benefits are expected to flow. Is that automatically what will happen? It generating good amount of revenue. Name matters. Okay. If you are talking about the thing, what happens? It is the name that matters. It is what? It has been generated internally. Is it right? It has been generated internally. Tomorrow they can sell this to other people. Is it right? They can sell this name to other people. Then only it is it is going to be called as an intangible asset. If it is generated internally, it is not an intangible asset. I am writing very clearly. One of the conditions, they will ask you this question in MCQ. Is that they will ask this question in MCQ. Means this is the normal definition. What it says, in order to recognize in the financial statements, an intangible must fulfill the definition of intangible asset. It is probable that they should have some future economic benefits. Definitely, the definition of asset is the same thing. What is the definition of asset? They should have a future economic benefit. They should have some cash movement should be there, inflow and outflow. The cost of the assets is measured reliably. It is normal everywhere. The one thing that will be repeated all the time in this paper is it should be estimated reliably. If these are done, then you have to initially recognized at cost. Is that what is the intangible asset? Again I am saying, when we are talking about intangible asset is nothing but it is separable. It arises from a legal contract. Okay, it arises means you should have ownership on that. Is that you should have a ownership on the brand name or on the name of the asset. Okay, if these conditions are satisfied, then it is going to be identified as a intangible asset. It is separable. It has to be bought or sold separately, and it arises from a legal or contractual rights. Fine. It must also need the definition. Next, what it says, if purchased intangible assets. If an intangible asset is purchased, what we are doing? We are purchasing license, patents, brand, okay, name. Okay, you are purchasing intangible assets. Okay, as a matter of fact, you are talking in terms of ACCA. Is it right? What happens? The person started ACCA. They have bought the name of that brand. Okay, they have bought. They have the outlet. Okay, now when you are saying that there is an intangible asset, ACCA is an intangible asset. It's the name of the brand. Okay, it is name of the brand. That's what we are going to take it a point. Okay, I can give the things which are reasonable to our understanding. Okay, can you name any intangible assets here? Any intangible assets? Fast.
What's the question, mister? I didn't hear.
Can you tell me any brands, major popular brands? Popular brands, which can be, if you take IKEA, you can take anything from other countries also.
Home center.
Yes. Okay. Home center. This is a brand. Okay. Is that now? Now what happens? You are taking license. Okay. You are taking the license. Is it right? You are taking the license. Is that I see? I don't want to take other brand names intentionally. Okay, that's very simple. Okay, you are taking the land. You are taking the patents. Okay, you are taking the patent. You are talking. See, you take the Panadol. Panadol is a Panadol is a brand name. Okay, Panadol is it will work. Okay, it will work anywhere. Okay, it will work anywhere. It is the way it has been done. Okay, it should be recognized. If you are purchasing, I will give you another example. You are talking in terms of recently HSBC and Sohar International. Okay, you are purchasing the brand of HSBC. You are purchasing the brand. It should be measured at cost. Understand? You have to pay. Without payment, you will not get it. Is that HSBC? And this is what it says. When you are having a brand, WhatsApp. See, I will say Facebook is there. Is it Facebook and WhatsApp? Is it Facebook acquired? Can't understand this. This is what it says. Is that Facebook? What happened? They have taken over WhatsApp. They have taken over Instagram. Is it right? They have taken over all the media outlets as such. Okay, social media giants. Now what happened? Unless until they have not paid, they will not acquire that brand. In intangible asset, remember very clearly, when the intangible asset is internally generated, it is not recognized. Is it right? Internally generated, not recognized. Intangible assets should be purchased. This is one of the conditions. If you remember this, it is 2 marks for you. Again, I am saying clearly, okay? Internally generated intangible assets is not recognized. Intangible has to be acquired, purchased. Fine. Again, as we have done, they have the measurement. We can measure in 2 models. Now you have done this in investment property, in property, plant and equipment, again in the intangible asset, cost model or revaluation model. What is the cost model? An intangible should be carried at cost less amortization. We are not using depreciation, but we are using the word amortization. Is it right? Amortization is nothing but, it's if you are taking there are 2 things are there. I want to make it. Is it right? There is a impairment. Okay, there is a impairment and there is a amortization. Is it? There is a impairment and amortization. Impairment, again, these are important things. Okay, this will not ask in examination, but it makes where we have to apply where. Amortization is have a finite life. Okay, finite useful life. What is the finite useful life? You are going to say that this asset is going for 10 years and the value will decrease. The amortization or impairment, value is decreasing. If that is the case, we use the amortization. If it is an infinite life, okay, no life forever, then we are using impairment. Impairment, it is IAS 36. Is that impairment belongs to where? IS 36. Okay, means when you are talking about the intangible assets, it should be carried at cost less amortization. Is that this model is more or less people use this model. Okay, amortization works in the same as depreciation. There we are using depreciation, here we are using amortization. Intangible assets is amortized over its useful life. There is an annual expense will be there, and it has been shown in where? It has been shown in the profit and loss account. Got my point? Amortization is on the intangible assets, and it will be shown in the profit and loss account. Intangible assets with finite useful life must be amortized. I will ask you this question again at some point of time. Okay, I will ask you this question again at some point of time. Difference between amortization and impairment. Impairment, infinite life. Amortization, similar to depreciation, shown in the profit and loss account, and it will be reduced by using the straight line method. Okay, with a zero residual value. This is very, very, very important. Fine. What is the intangible asset with an intangible asset with indefinite? Some assets will be indefinite. In the question, it will be clearly mentioned whether it is a definite life or indefinite life. Okay. If it is indefinite life, should not be amortized, and it should be tested what? Impairment. Is it right? It should be tested what? Impairment. Means in the question, question will be very clear. They say it is a definite intangible asset with definite life, amortization. Intangible asset with indefinite life, it is impairment. Write down somewhere in your notes. Okay, write down somewhere on the notes. Fine. Now, that is the cost model. Okay, that is the cost model. What is the revaluation model? Same thing, revaluation model. When we are revaluing it, the intangible is revalued at the carrying amount or fair value. You know the carrying amount, is it right? Carrying amount is nothing but the value minus amortization. Okay, value minus amortization. How much we have amortized? Is a less subsequent amortization and impairment losses. See, what is the difference? You should ask me this question. Very important. What is the difference between amortization and impairment? Amortization is reducing systematically. Is that systematically it will reduce during life? Okay, is it right? During life. Whereas impairment, no, it is a loss. Is it right? It is a loss. Your impairment is not listening. Is it right? Not listening. It is not responding to the value. Okay, this is the basic difference between amortization and impairment. Is that systematic life? It is like a depreciation. It is not depreciation. Okay, it is like a depreciation. An active market is a market in which transaction takes place with frequency and volume. What is the active market? Normal market. Is it right? Active market is where normal transaction. What we are buying and selling is an active market. Okay. What we are doing, buying and selling, is an active market. Online products are active market. What the rule says, IS 38 says that active market for intangible assets are very, very rare. Is it right? Active markets for intangible assets are very, very rare. Okay. You will not find people who are buying brands. Is it right? And specifically prohibits revaluation. They will not consider this. Okay. Specifically prohibits. revaluation of patents, brands, trademarks, and publishing rights. Fine. Now, they are talking about, see, very, very important. Read, understand this. This constitutes 2 to 4 marks. I am telling you very, very clearly. Is that it constitutes 2 and it helps us in calculation also. As a guide, indicators, what they are talking about, active market. Items traded within that market are similar products. Homogeneous means similar products. The prices are available for the public. Okay, that's fine. Okay, most intangible assets have high value because of uniqueness. Brands will have high value. Panadol, how much it costs? Even I am telling you this, Panadol, even it will not cost them 2 paisa. Is that 2 paisa, 3 paisa it will cost for them. But they are selling, if you take into consideration one Panadol, you are taking the strip of 10 tablets. Is that you are taking the strip of 10 tablets, each tablet costs 100 paisa. Each tablet costs 100 paisa. But what happens? Their cost is only 2 paisa, 3 paisa, maximum 4 paisa, not the more than that. Okay, because it is a very uniqueness. Is that it is very unique. Because of uniqueness. Is that people will have headache or people will not have headache. That's a different issue. But it is psychologically they say that if I have my Panadol, my headache will go. That is the psychological. People are got addicted to that. Okay, that is the impact it is having. Fine. Certain licenses may fit this model and could possibly revalued. Most other intangible assets will not. Is it? Most other intangible means some licenses are going to be fit. We cannot, the message is we cannot revalue. This is very important. See the thing. Internally generated intangible assets cannot be capitalized. Understand point? This is very, very important point. I am putting this with purple color. The cost internally generated. I told you, Cuckoo Burger is not, till they can sell it, they can use the name, but they cannot say that that value is this much. Okay, they can increase the price, fine. They can increase the outlets, they can increase the turnover, everything is fine. Okay, very interesting. Is it right? And very tasty also, alhamdulillah. Is it right? These people can increase the sales. People can increase the profits. Is it right? Sales will increase profit. But they cannot say that the brand name is this much. Only when it happens, when they want to sell it, they are only selling the brand name. Is it? Then when they sell it, then only it is a intangible assets. Very, very important point. Okay? Is it? As the cost also cannot be identified separately from the cost associated for that. The following internally generated items may never be recognized. Again they are saying goodwill, brands, masters, publishing titles, customer list. We cannot, see you are doing business, is it right? You are doing business. Now you see the thing. You are doing a business. You have an app. Okay, you have an app. You have an Instagram page will be there. Now you are going to say that I am having 10,000 followers in that. Fine, okay. But when this will come into picture, when you are selling this app, okay, then only people will judge. Oh, this platform is having 10,000 followers. This platform is having 100,000 followers. The moment the followers are increasing, is it right? The value will increase. But whenever it has to be sold, then only it will be measured. Internally generated items may never be recognized. I am telling again and again, repeating this. Are you okay with this?
Yes, definitely.
Okay? Now, slowly and steadily come over it. Okay? Don't forget about it. Yeah? They are talking about, see, wherever it is there, read this, okay, read this. This is for your explanation. The same thing what we have covered. Internally generated brands cannot be distinguished, cannot be from cost. So it should be written off as incurred. Okay, means we are talking about the things. Fine. Now you see the things. How should following intangible assets be treated in the final? A publishing title acquired a part of subsidiary company. A publishing title you got. Now we don't have publishing, all are online. Is that you have so many online sites, okay? So many online publishing sites are there. A license purchased in order to market a new product. One by one we'll say, okay? The answer depends whether the asset can be valued reliably, if this is possible. Acquired, keep it in mind, acquired means purchased. Acquired means purchased. Okay? The title will be recognized at its fair values. Otherwise, it will be treated as a part of goodwill on acquisition. Acquisition, when you are purchasing, then only it will be treated. Is it right? When it is purchased, you are purchasing another business, then only it will be treated as a goodwill. License. A license has been purchased separately. It should be initially kept. If you are purchasing separately, they have purchased. See the thing. These words are very important. I told you, if you are purchasing, if you are acquiring, then only it will be treated as goodwill. Otherwise, it will not be treated as goodwill. Fine? Are you okay? But any doubt anywhere, just stop me. I know where the students will get doubt. Understand my point? Immediately I will ask. I told you, is it right? Just now I told you, difference between amortization and impairment. You should have asked me this doubt. Okay? Next. Keep it in mind. Okay? Next. Goodwill. Any idea about goodwill? Tell me. Any idea about goodwill? Fast. Right or wrong? Nothing will happen. I'm here to support
reputation.
you. Pardon?
It's a company reputation.
Company reputation. Good, exactly. Now, company reputation. Okay? Now, how you will do company reputation? How will you see company reputation?
By operating a business in the market.
You should know. Is it that? See the thing. You will always make sure. Remember this, we will cover somewhere in chapter 17. Okay? You will have a share value. Is that equity share? Is that equity share value? Is that market value? Is that market value? Okay? Assume. See, usually what will happen? See the thing. Little bit we have to be clear. Okay? You have a book value. How much is the book value in Oman, each equity share? How much is the book value of each equity share? In Oman, it is how much? 100 paisa. Is that 100 paisa? The value of each equity share is 100. Now what you will do? It is 100 paisa. Okay, it is 100 paisa. Now you are performing well. What will happen? The value will increase. Okay, the market value will increase as your performance increases. Is that this is equity and liabilities. How much is equity? That much will be your assets. Okay. Equity and liabilities is equal to total assets. Now, your market value is more, your equity value will be less. Okay? Your market value, assume your market value is 1 Riyal 105. Okay? Your assets value. Okay? Your assets value. I will go in more detail subsequently. Okay? Just I am doing. what is the book value? Okay, the book value is going to be how much? Book value is 100 by the. What is the difference? Difference is how much? Difference is 1 real 005. This difference, if it is positive difference, then it is going to be called as goodwill. I am just giving you a very simple explanation. Okay, I will modify, I will upgrade this information at a later stage. Is it right? More technically. Okay, this is goodwill. You see, goodwill is not your good name. Is that your profits? By having good name, your profit sales will increase, your profits will increase, your market value will increase. Okay, your market value is above and up. That is only the goodwill. Okay, the difference between the value of the business as a whole and the fair value of net assets. Is that difference? We will cover this, okay, in detail. Is that the difference between, I will say we have covered in lecture 3. Okay, again we are going to cover this in almost in chapter 16, not before that. Okay, means you should have the difference between the market value and the net assets. Okay, market value and the net assets. What is the formula for net assets? What is the formula for net assets? Total assets minus liabilities. Okay, total assets minus liabilities. Keep this, these are all important points. Okay, these are the basic fundamentals. Is it right? Now, what separatable, those assets and liabilities that can be identified and sold separately without disposing of the business. Is it? Keep it in mind how it happens. You have assets. Is it right? You have assets. Assets 1, asset 2, asset 3, asset 4. You want to sell it off. Okay, you are having the business and you are having 4 different businesses. Take one. You have business. You have 4 businesses. You are selling one business. You are selling one of the business. You are keeping with you 3 businesses. You will sell one of the business. By selling this business, it will not affect your current business. Separable, which means you can separate easily. You can identify easily. Is it? They include identifiable. Is it? They include identifiable intangible assets such as patents, licenses, and trademarks. Is that if you are selling any asset, it should not have any impact or influence on the business. You are continuing with the first 1, 2, and 3 businesses. You are selling off the other business. Separable net assets as such. Okay. Now, what happens? You should be in a position to calculate fair value. Okay. Fair value means, see, when you are selling you have a car. Simple example. You have a car. You have a sports car. Okay, you have the sports car, or you have a 4-wheel drive. Is it right? You have old car will be there. What will happen? Old car, antique is there. You have a classic car is there. The value will be more. Okay, the value will be more. That is the fair value. Okay, that is the fair value. Fair value is defined. What is the concept of fair value? As per IFRS 13. Is it? As per the price that would be received to sell an asset or paid for a liability in a ordinary transaction between 2 parties at the measurement date. Fair value means you are selling. Now I will give an example, okay? You are saying that you are buying something or selling something on OLX, okay? OLX. What will happen? They will mention eBay is there, OLX is there. Is it right? You are having so many online platforms. Amazon is there. Is it right? Now you are buying and selling. Immediately product will be there. If you buy it, fine. If you don't buy it, after 1 hour, if I say after 1 hour I'll see, after 1 hour nothing will be there. Is it right? It is already sold. Means you have what? You have a active market. A fair value is nothing but you have a active market. You should have a participants. Is it right? You should have a participant. Is it right? And you should have on any time. Is it right? On any time. That is a simple definition of a fair value. And there should be people who are willing to buy and willing to sell. That's very important.
Doctor,
Yes.
my screen is got stuck. I think you move forward.
It's now clear?
Not sure. Still.
It's clear?
It's all right with us.
Refresh, my dear. Quick.
Sumaya Hussein.
Or just exit and enter.
No, it's me, it's okay.
Now it's okay?
I will enter again.
سالم عندك إرسال سالم.
There's some connection problem.
Yeah. Okay, doctor, carry on.
Okay?
Yeah.
Okay? Understand the things, okay? Goodwill. Now, what is the goodwill? Because goodwill happen very soon. It talks about what? See, all we know, it is reputation for quality and service. You have a technical expertise. Okay, you have having good contracts. You got good contract. You have good staff. That is also it's a matter of good management and staff. Is that? This is the all qualitative. Is that? These are, I will write this. All these are what? All these are qualitative. Okay. All these are qualitative. Next. Purchase and non-purchase. Purchase goodwill. Always goodwill will be recognized only when it is purchased. Done. There is no other option. Arises when one business acquires another as a going concern. Running business. Okay, running business. Then only it will be called as a goodwill. Includes goodwill arising on consolidation of subsidiary. You are buying some other company. I told you. You are talking about HSBC and Sohar International. There is a goodwill. Sohar International has paid some amount more than the book value. Okay, more than the book value. Within only our country. Okay, we are not talking about globally. We are talking only about within the country. Is that will be recognized in the financial statement as its value for a particular point is certain. Means it's happening. If it's happening, then only you will recognize. Otherwise, you will not recognize. Non-purchase use goodwill. It is also known as inherent goodwill, coming from ages, coming from years. No identifiable value. Is it right? Non-purchase goodwill. No identify is not recognized in the financial statements. Is it right? It is not recognized in the financial statements. Fine. That is the concept of goodwill. Okay. IFRS 3. again, see, it is only introductory, okay? I have not seen any more questions on this. Understand point? Wherever I have not seen for the last 3 or 4 exams, I have not seen anything on IFRS, but combination, is it? What is the business combination? As per what we have to focus, as per IFRS 3, what is goodwill? Is an asset, same thing. What is an asset? You should have a future economic benefit. People will say that asset is what we own. No, that is fine. I'm not saying that that is not right. That's okay. But when you are studying a professional examination like this, an asset is called as a future economic benefit. You should get, see, you are investing now, okay? You are making an investment now. When you make an investment now, you expect future cash inflow. That is an asset. Is it? That is an asset. Is it? Arising from the assets for business combination that are not individually identified and separately recognized. You remove the assets, there is no goodwill. You cannot say that I can do business only on goodwill. Can we do business only on name? Goodwill, no assets, physical assets? Is that physical assets? You don't have any physical assets. You're just saying that I can do the business. No. Is it? An asset representing the future benefits from the assets acquired in the combination that are not individually identified and separately recognized. You are buying the business. You are buying the entire business. When you are buying the business, definitely there is a value for that. Okay? This is what we are talking about, the business combination. Fine? Accounting for non-purchase or goodwill, again, I don't want to say, they said very clearly, non-purchase goodwill should not be recognized in the financial statements. Okay? This is the first part of this lecture. This is the first part of the lecture. We have not done anything. We are just, I understand what is the goodwill, when it has to be recognized, when it should not be recognized. 2 models, cost model and revaluation model. Okay? Are you clear about this?
Yes, sir.
Okay, now. Okay, next part. These only 2 parts are there. Okay, I am very clearly in giving a steady map for you, steady guide for you. Okay, you have 2 things. One is research. Understand this, you will understand the every other thing. Development. Goodwill we will cover in chapter 16 to 20. Not before that. Understand my point? Not before that. Research and development you are covering now. What is research and development? Research is a process. Is it right? It is a process. When it is a process, is it right? It may be successful or it may be failure. Development happens after success. Okay? Development happens after success. Next point. Research you have to show in profit and loss account as an expense. Always. Okay? Always. Development you have to add to intangible asset. In statement of financial position, initially I will write balance sheet. Always. Is it right? This is the basic difference between a research and development. That's all. Nothing is there. Okay, nothing. Research is originally, research is original. Is it right? Research is original. Come back to this. Plan investigation. You are doing investigation. You are doing some process. Is it right? To get some new scientific knowledge and understanding. Is it? Research is there. Is that you are gaining. You are in process. Whereas, is that whereas development is the application of findings. Once you are saying that yes, it is successful, then you make development. Is it right? The knowledge or to plan or design. What you are doing in development, you are making production. Yeah, you are making, means what happens when you are talking about the development, development will give you sales. Development will give you revenue. Development will give you income. Research will not give you any income, nor revenue, nor any sales. Is it right? Is it right? That this is what it says. New substance, improved development in terms of material, devices, product, process, systems, services. You see that thing. Before the start of a commercial production or use. It will be used for what? It will be used for commercial purpose. It will be used for commercial purpose. This is the basic definition. In the question, they will ask, they will give the values and they will ask you to separate, do the calculations with respect to research and with respect to development. What is the amount of research and what is the amount of development? Okay, that's what it said. Now you see the thing. What they said, what I have mentioned, research write-off incurred in statement of profit and loss. Write-off as a expense. Rule is rule. Again I am saying rules are very important. If you are missing one rule, you are one sentence, you are missing one rule. Development expenditure is an intangible asset. If and only if you have the things. What is they are using the word pirate. Okay, they are using the word pirate. Probable flow of economic benefit. Intention to complete. Okay, it should be a reliable measure. You should have resources, adequate resources. There should be a technical feasibility and you have to expect it to be profitable. Okay, you should have these things here. Pirate. Probable flow of economic benefits, intention to complete, reliable measure, we have to measure reliably, adequate resources, you should have resources to complete the project, you have a technical feasibility, and most important, it should be profitable. This is the difference between a research and development. Till now I can tell you very clearly, till now we didn't thought like this. We say that research and development is only one. But basically research is a profit and loss account, development is a capitalization balance sheet. Fine. Okay, you can study wherever I am not, see wherever I am skipping, is it right? You should read, take my word, and I will ask, I know each and everything what is there. It is right, it is only expenditure incurred, all the things. It is an item of plant used in development. The depreciation of plant is added to development cost in intangible assets. The small things makes lot of difference. Okay, small things make lot of difference. Now they gave you the question. Read the question first, everyone. an entity has incurred the following expenditure during the current year. 1000, is it right? 1000 in spent on initial design beginning. He anticipated this design will be taken forward over next 2-year period to be developed, not to be developed and tested with a view of production in 3 years time. Is it right? Now I will ask Hussein. They have spent initial design, new product, anticipated, they are expecting that this design is expected to take forward next 2 years. To be developed, not developed, to be. We have to take in research or we have to take in in development.
Development.
To be developed. It is not developed.
Research.
To be.
Research.
To be developed. Small things. To be
Research.
developed.
Take it as expense.
As an expense. It is still in the process. Is it right? It is still in process. Is it right? It is still in process. If it is still in process, it should be shown in a research. Okay, words are very important. Is it right? It should be shown in the research. When it is shown in the research, it has to be expense. If it is going to be expense, it has to be shown in profit and loss. Okay? Is it clear?
Yes.
Next. 500 spent on testing new production system which has been designed internally and which will be in operation during the accounting year. Is it right? This should reduce the cost of production by how much? 20%. Tell me, Salim.
Should be in development.
It is research or development?
Development.
Why?
Because it is designed, yeah, it's already designed,
Yes, good.
and
And that's
the cost of the system, it will increase the production by 20%.
Yes. Is it right? It means a future economic benefit. Is it right? There is a future economic benefit. It has been in operation during the following successfully. Pirate, okay? You have to take into consideration this rule. Is it? They have to take into consideration this rule: probable flow of economic benefit, intention to complete, there is a reliable measure, you have resources to complete the project, technical feasibility, and it is going to be profitable. If it is profitable, these are there. Pirate. If these rules is going to be fulfilled, then it is going to be called as a development. Is it right? This is research and this is development. Is it okay? Now, another one. A entity has following, next margin. Entity has incurred the following expenditure during the current year. A brand relating to a specific range of chocolate bars, purchased, brand name, and it has been purchased. By the end of the brand specialist has valued this at 240. Tell me. Tell me. It is a research or it is expenditure? Development. What they are asking you?
It's in the accounting treatment of the above.
Only first one. A brand name relating to a specific range of chocolate bars. Purchased. If you are purchased, intangible asset. Intangible asset. Condition is it has to be purchased. Understand point? Then only it is intangible asset. Otherwise it is not intangible asset. Remember this very important point. Intangible asset. Here they have purchased. For how much they have purchased? They have purchased it for 200,000. Okay. Now, by the year end, they have revalued it. Fine. Okay. We are not bothered about it. Is it right? They have revalued it. Purchase. Because it has purchased, it is a intangible asset. Is that because it has been purchased, it is an intangible asset. Now, the question is, are you clear with this? Are you clear? The band has a revalue. Revaluation is there. Is it? Revaluation. What is the conditions of revaluation? There should be active markets. Okay? There should be active markets. We have done in one of the points, it has been mentioned very clearly that these things will not have revaluation. Is it right? These things should not be revalued. Somewhere we have covered that point. Okay, we have covered by that prohibits. See the things. That revaluation of patents, brand names, and trademarks and publishing rights. These have been prohibited, not acceptable. Is it right? This has been prohibited. See the thing. Now you understand, when you are reading a rule, the rule will reflect in the question. Okay? The rule will reflect in the question. Now what happens? Is that it has been revalued? Is it right? If it is revalued, they should have IAS 38 prohibits. Is it right? IAS prohibits revalue. Which revalue? Brand name. Is that brand name? Okay, this is what fine. Now, they have definite life or indefinite life? They have definite life, indefinite life. Life is given. Is that if they have finite life, okay, if they have finite life, or if they have infinite life. If they have infinite life, what you have to do? We have to do impairment. If they have the finite life, they have to do amortization. Are you clear about this? Are you understanding? Martin, Salim, Hussein and Sumayya.
Yes, doctor.
Okay? See, these are the things, okay? Now, is that if there is a finite, you have to know. Next, Sumayya, I am talking about this. Tell me, 500 spent on developing a new line of confectionery, including 150 spent on research the product before management gave approval to fully fund the project.
It is expense.
How much is the expense? 500, okay, 500,000. 500,000. They have divided, okay. 150 they have spent on where? They have spent on research.
Yes, sir.
Okay. 350 they have spent on where? They have spent on development.
Development.
Is it right? They have spent on development. In the financial statements, listen everyone, in the financial statement, the amount spent on research should be shown in profit and loss account as a expense. Development, it has to be capitalized as a intangible asset in the statement of financial position, where we have to show in intangible asset. Is it okay with you? Is it clear?
Yes, sir.
Okay. Same thing, what we have studied, that only we are going to cover. Training cost for staff to use new manufacturing business. The training cost amount 10,000. Staff is expected to remain for average number years. What we have to do? Yes, who is left? Salim? Okay, Salim, come. Tell me. What we have studied in IS, now what we have studied in IS 16, training cost, tell me. Mazin.
You mean what we studied and what?
Chapter 2, IS 16, training cost.
We should capital with the property, plant, equipment.
What we have done? Training cost should be capitalized or not?
We capitalize.
No, my dear, no. Check, revise. Revise the things. Training cost should not be capitalized. Understand point? Training cost should not be capitalized. That is the still in the beginning stages. Okay, still in the beginning stages. Revise the things. That is the reason I will tell you again and again. I will repeat again and again, just to make sure that you should keep it in mind. Training cost on the staff should never capitalized wherever it is possible, wherever it is applicable. Is it right? Training cost. Here you are the training cost. Okay, it is nothing but salaries. It is an expense. Is it right? It is an expense. Salaries is an expense. It is. I am not saying it is salaries. Similar to salaries. Okay, similar to salaries. It should be shown in where? It be shown in the profit and loss account. Is that? Now, never, see, staff will never be an asset. Okay? Never, I am writing this, never ever be an asset to the firm. Okay? Never ever. It should not be, must, is that? It should, must not be capitalized. Very important point. I am telling you, the moment I am saying this, you will remember when we are doing question answers. Okay? When you are doing question answers. Are you clear about 3 points? The first one, the second one, the third one. First one is, it has been purchased, it has to be capitalized. Is it right? It is an intangible assets. But IS 38 prohibits revaluation. Question point number B, 2, you have a research, you have a development. Research should be expense, development should be capitalized. Point number 3, this is what they will ask, as simple as that. Nothing is there more than this. Is it? And the point number 3 is training cost. Training cost will never be capitalized. It will always, is it? Always it has to be expensed only. Is it? Always it has to be expensed only. Are you clear about this?
Okay.
Any doubts?
Yes.
Take your time,
Yes.
understand and ask me questions.
Hmm.
Is it okay? Salim, Mazin, Sumaya and Hussein.
Yes, doctor.
Fine. Now, this much is only there, okay? Intangible is a very small chapter, okay? Now, what they are saying, improve has deferred expense. Deferred means future, okay? Deferred means next, not how much? 600,000 relating to development of Miracle brand. Yes, it is expected that, see, I will divide the sentence, okay? It is expected that the demand for the product will stay at the high level for next 3 years. Annual sales 400 this much. Brand X sells for 10. How should development expenditure be amortized? Improved has deferred the expenditure 600,000. They have the product next 3 years. Is that this much? 400, 300 and 200. What is the value? Value is 10. How should the development expenditure be amortized? What they have said? They have said that two possibilities. Two possibilities. The first one is what? You can divide 600. Is it right? You can divide 600 divided by 3 years and do like this. Or you take 600, okay, to take 600. When you are taking 600, you divide by the sales, okay. Total sales are how much? 900. Is it right? Total sales are how much? 900. 400, 300, 200, okay. 400, 300. They have taken, I will write the formula. Is it right? Current year sales divided by total sales, is it right? Total sales, is it right? Current year sales into total sales, multiply by how much? Multiply by development expenditure. Means either you have two options. You can do in either way. You divide it with 3 years or you divide proportionately. This is called as proportionately, or we use the word pro rata. Equally balanced. Based on that, first year 400, second year 300, based on the sales, you divide it accordingly. Is that you have both the options with you. Okay? Yes, Salim. Is it okay with you all?
Yeah, doctor.
Where is Salim? Salim
no.
left.
Maybe connection issue.
Yes, Salim.
Yes, doctor. Sorry, I have an issue with the.
Now it is displaying on your screen.
No, yes.
Fine. One by one, okay? One by one. With whom we will start first? Tell me.
It's Sumaya.
Yes. Okay, fine. I'm here. Tell me. I will help you out, Sumaya. I will help you out, everyone, okay? Don't worry about that. Copper PLC spent 20,000, okay? Copper PLC spent how much? 20,000, okay? On researching new cleaning for chemicals. They also spent 40, see 20,000 they spent on research, okay? And 40,000 they spent on developing. Help me, okay? Cleaning. A new which will not be go commercial production till next year. Still it is not in the commercial production, okay? 20 and the development project meet the criteria laid down in IAS 38. Is it right? It is right. Now, see, they also spend 40,000 developing. Develop means they are very clear about development. Okay, which will not go into which will not. If it is not going to commercial production, what you have to do? We cannot do amortization. See, when you generate revenue, is it right? When you generate revenue, then only amortization. Okay, then when you generate revenue, when there is income, then is expenses. There is no income, you cannot show expenses. Is it right? Now, what they say, how should this cost to be treated in financial statements? Tell me, Sumaya. Where we have to show research and where we have to show development. 60,000 should be capitalized. Is it right or wrong?
Research, profit and loss account.
Which option?
C.
Which option again, please?
C.
Okay. See the thing. 60,000 should be capitalized. No, we cannot capitalize. Okay. We cannot do. 40,000 should be capitalized as an intangible asset. Should be amortized. We cannot amortize also. We cannot unless it is started production. Is that started revenue? Reasons should be there. Okay. Is that this is okay, but it should be not should not be amortized. Is that 40,000 should be capitalized intangible asset and should not be amortized. 20,000 should be returned in profit. Okay, 60,000 should be written off to the statement of profit and loss account. Next. Yes, Hussein, tell me. Which two of the following items should be potentially be classified as a intangible assets?
Purchase brand name,
Good.
and D, license and producer.
Salim. Next. Sam company provide the following information. Is it? Sam company provided the following information. Project A project B, project C. What is the question? Which of the following adjustments will be made in the statement of financial statement as 31st December? Project A has been spent on research phase of this project during the year. They are spent on the research, okay? If it is spent on the research, profit and loss account, it should be expensed. Project B has been spent on this project previous year and 20,000 this year, 80,000 last year, 20,000 this year. The project was capitalized in previous year. However, it has been decided to abandon the, means you have to leave the project at the end of the year. Is it right? You have to leave the project at the end of the year. Project C, 100 was spent on this project this year. The project meets the criteria of IS 30 and is to be capitalized. First one, what we have to do? Margin.
The 50,000 has to be in the research.
Spent on research. Research
profit
means
and-
it has to be spent on profit and loss. It has been written off. Okay, it has to be written off. Now, they are closing this project, project B. They are spent. But what they have done, it has been decided to abandon this project. No continuation. Is that no continuation? We are going to stop this project. Again means when you are stopping the project, then we have to show it in the profit and loss account. Whereas the third project was spent on this year, the project is fulfilling the requirements of what? IS 38.
Yes, last
Now, you read which option is right. Tell me. Don't worry, right or wrong, I am here to help you. This is profit and loss account, okay? This is your statement of financial position, okay? First project is how much minus, okay? How much is there? What is the amount of first project? First project is 50,000, okay?
50,000.
50,000. Reduce, profits will be reduced. Is it right? First project. This is project A. Next. Second project also what's happening? They are going to leave it. If the project has been capitalized previous year. Last year they have done. Is it right? Last year they have done. But this year they are going to abandon the project. Is it right? This year they are going to abandon the project. What is the cost of the project?
80.
Is it right? What is the cost of the project? Cost of the
80,000.
project is how much? 80. Is it right? Now, this is with respect to what? This is respect to project B. Project C, they are talking in terms of capitalization. Is it right? They are talking about capitalization. How much is there? What is the
100,000.
amount? 100,000. Okay?
Yeah.
Now, what is the option?
C, doctor, I think so.
Huh?
C, reduce profit by 130.
And are we increasing assets by what? 180,000? Are we raising the things on the project meet the criteria is to be capitalized? Now, are we increasing by 180,000 assets?
Yes.
Doctor, it is D.
What's happening? See the thing. One project has, see, if you remember this, is it right? If you remember this, how much, what is the, see, what happens, this is the expense, is it right? This is a expense. This is a write-off. Both are different. Okay, both are different. Fine, both are different. Your net assets will increase by how much? See, reduce profit by 70. First go one by one. Reduce profit by 70. Is it 70? Can you arrive with this figure of 70 here? Can I reducing the profit of 70? Are we, tell me first option. Tell me the first option. Are you reducing profit by 70? Yes or no? Can we reduce the profit by 70?
Yes, we can.
How?
The expenses is 50 and the writing off is 80. It cannot be 70, doctor.
It cannot be 70. Is it right? It cannot be 70. Fine. It cannot. If anybody have the answer, let me know. I will listen to them, their ideas. Okay? Next. Is that? Your opinion, your discussion is very important. Reduce profit by 150 and increase non-current assets by 20. Reduce profits by how much? 150. Can we reduce profits by 150? Can we reduce profit by 150? Sorry, here I have not made another point. Okay, I have not made. This is last year. What they said, project B,
Current year 20.
previous year and
year.
this year. Is it right? This is previous year.
20.
This is previous year. This is current year. Current year is how much?
20.
20.
So, yeah,
Is it right?
150. Yes, reduced by 150.
Reduced by how much? 150.
Then D can be.
Is it right? Now, the answer should be in B and C.
D.
Okay, the answer should be in B and C. Now, increase non-current assets. See the things. Increase non-current assets by 100. Which one is? We should increase by 20 or we should increase by 100?
We reduced.
Net assets increased by how much? See the things. Net assets has been increased or how much? See, you have this is that we cannot say that it has been increased by 100. How much is last year? How much you have written down? Last year, how much you have written down? is capital expenditure. This year they have written down is the revenue expenditure. Is that this project was capitalized in the previous year. Previous year they have capitalized. When it has been capitalized by previous year, now you are abandoning, you are stopping that project. When you are stopping the project, the assets value will decrease by how much? The assets value will decrease by 80,000. Means the net assets will be increased by how much? Only 20,000. I will explain you again. Project A, it is an expense, straightforward. Project B, two things are there. Last year you have capitalized, okay? Last year you have capitalized. Is that last year you have capitalized 80,000. Current year you have spent 20,000. Total loss is how much? Total loss is going to be 150. Profit will reduce by 150. Okay. Now the point is coming to the assets. Assets were how much? 100,000. Now you have stopped one project. Because of that project, the assets, are we showing the assets of the project even if we are discontinued? We have discontinued this. Is it right? We have discontinued this project. Discontinued project B. Okay, discontinued project B. When we discontinued project B, the assets will decrease by 80,000. Mean the net assets will be how much? The net assets will be only 20,000. Means you have to decrease profit by 150 and increase assets by how much?
20.
20.
And B.
Any doubt anywhere, you ask me. Understand? If you notice me, I will say this every class at least 10 to 15 times. Next, who is there? Come back, Hussein. Starting from you again. Okay. Which of the following statement concerning the accounting treatment of research and development are true according to IES? Research is original and planned investigation undertaken for the prospect of gaining new knowledge. Just I will go to the research and development definition, okay? Just I will go back to research and development definition. It will be easy for us to, is it right? What it says, here it has been given somewhere. Where is that? Yes, where is that? This is intangible assets. It's not, we are not talking intangible assets. So, see the thing. Research is a planned investigation. First one is right. Development is application. Planned, okay, improved before start of commercial production. Now, you see the thing. Just to say, is that development is the, research is a original and planned investigation. Prospects of gaining knowledge. It is right. Development is application. Is it right? Depreciation of plant used specifically on developing new project can be capitalized as a development cost. Yes or no?
It's no.
See the things. The depreciation on the plant is added to the development cost in intangible assets during the period that the project meets development criteria. We have missed this sentence. If you notice this, now they will ask you from the same sentence. Is it right? Is true or not?
Now it's true.
True. Is it right? It is true. One, two, and three. Okay? 1, 2, and 3. 1, 2, and 3. Expenditure once treated as an expense cannot be reinstated as an asset. True and false? Have you covered this point? No.
It's false.
See the things. See the development expenditure recognized as an asset as an expense in the profit and loss cannot be subsequently instated as an asset. Is it clear? My worry is that this is what I want to. I will always try my best to tell my students that how important is each and every sentence. Is it okay? True and false? Expenditure once treated as an expenditure cannot be reinstated as an asset. Is it right? It is right. Answer is
True.
next. Sumaya. Which of the following, is it right? Which of the following should be included in company statement as an intangible asset? Under internally developed brands, should we treat as an intangible as brand? Internally developed?
Yes.
Never. Internally generated is not an intangible asset. Next, internally generated goodwill?
No. No.
Expenditure on completed project research? Research.
No.
No.
Payment made. Payment is purchased. Purchase made on successful registration of patent.
Yes.
You have paid amount. Whenever you have paid, it is going to be treated as a external generated. Is it right? It is external generated. Next. Who is this one? Who will take voluntarily? Come fast. Yes, Salim. During the year 31st December, yes, incurred 200,000 on development. New product. In addition, they have spent 600. Okay, they have spent 60 on machinery used to help develop. In addition, they have spent 60,000. Fine. And 40,000 on developing a brand. Is it right? On developing a brand, how much? 40,000. Commercial production is expected to start 2009. The estimated, see the thing, they have mentioned 4 years life. It is amortization or impairment? It is amortization or impairment?
Amortization.
Amortization. Good. Is that? Life is how much? Life is 4 years. Amortization. What should be the value included? Is it right? What should be the value included? Included within intangible assets. Respect of sex statement filed as on 31st December.
It is 200,000.
It is
200.
It is 200,000. Which can be capitalized, which cannot be capitalized. First tell me that.
Uh, 60 is spent already.
60, we see, they have incurred development cost. 200 they have incurred development cost. Okay, 200 they have incurred development cost. 1 minute. Okay, 200 they have incurred development cost. Fine. 200 they have development cost. Okay, next. Brand how much? 40,000, and they spent how much?
60.
60,000. Whatever the development says, it is going to be capitalized. Okay, first thing. Next. In addition, they spent, divide the sentence, okay, divide the sentence. In addition, they have spent 60,000 January after development. After development, they spend how much? After development, they spent how much? 60,000. Okay, after development, they have spent how much? 60,000. After development, they spent 60, used to develop the new product. 40,000 on the brand identity. Commercial production is expected to start 2009. They said that 2008. 2008. Tell me. On January, see, this is on 31st December. Dates are very important. 31st December 2008. 1/1/2008. This is beginning. How much they have spent? 60,000. Is it right? They may use to develop new product, and 40,000 on building the brand. Building is internally generated. Is that you are building the brand means it is internal generated. Internal generated is not goodwill. Okay, internal generated is not goodwill. Now, they have said that it will start production of. They have spent 1/1. How much? They have spent 1/1/2008 60,000, and it is going to be for how many years? It is going to be for how many years? 4 years. Before the start of production, they said that life is going to be how much? Life is going to be 4 years. Means on this amortization will be how much? 60,000 divided by 4 years. Is it right? 60. It comes to how much? 15,000. Is it right? Now, capitalized amount. Is it right? Capitalized amount. Capitalized amount, how much you have to make? We have to make the
250.
development cost is how much? Development
200.
cost is 200,000, okay, plus you have to take
50.
amortization because it is still not it is not in commercial production. How much is amortization? 15,000. Total value is how much? 215. How much you have to capitalize? You have to capitalize 215. Internally generated, we should not capitalize, okay? Internally generated, we should not capitalize. Fine, that is the reason we are not using 40,000. Okay, that is the reason we should not using 40,000. This is internal generated. You should know what is internal generated. They have developed, they used to develop, and they started to building the brand. They have not paid, okay? They have not paid. This is what I will write here. This is internal generated.
Doctor, but how we can specify that it is internal?
See, you assume yourself, you have paid 40,000 on building the brand. You have made some advertisements, you have made some promotions, you have done some campaign, you have been done. You paid for that. Is it? You have paid to build a brand. If you have paid to build a brand, it means it is it is internally generated. Okay?
Okay.
Next. Who is this? I don't want to name anybody. Who will say right answer? Which two of the following? One by one, you can tell one answer and another person one answer. Which two of the following criteria must be met in development in capitalized according to? Next, tell me. Technical feasibility, future revenue. See, we have done, is it right? Development expenditure. I will go simply I will go by. They are given us. They gave you 5 points now. Yeah, here, pirate, okay, probable, intention, reliable, adequate, technical, and expected future things, okay, pirate. Fine. Is it technical feasibility? Is it right? And intention to complete. Is it right? PIRATE. This future, you have future revenue not. There is no need to reliable measurement. PIRATE. What is the answer? A and C. Are you clear about this?
Yes.
Refer pirate. One by one. Tell me please. Now it's your turn. Okay. 400,000 developing a new process which will bring no revenue but is expected to bring cost savings. Which column? Capitalize or expense? Sumaya.
Capitalize.
Because future economic benefits. Future economic benefits. Next, margin.
Yes, doctor.
Tell me.
Capitalize. 400 is not a new product.
Read. 400 developing a new product. Development launch a competitor launch a rival product. Medra is hesitant to commit future funds.
Expensive.
Expense. Intention to complete is not there. Is that?
Yeah.
No intention to
To
complete.
complete.
You have to give reasons. Then only you will understand. Okay? If you give reason, it is equal to 5 questions you are understanding. Next, Salim. 400 spend on marketing, new product, which has led to increase in sales.
Expense?
Expense. Hussein. 400 spend on designing new corporate logo for business.
Expense.
Will be expense.
Spent, okay? Is it clear to you? Is it okay?
Yes, doctor.